Taking a look at the interest rate environment today, I want to focus on the 10-year note. 10-year note under some pressure once again today, I should say. The note being bid up, rates under pressure. The note rallying today, current level right around the 12420 level. We did see a high of 12431, a low of 124085 on the bottom end. So settling in the middle of the range for the day. But again, once again, we're seeing a rally in the 10-year note continue. We're seeing the 10-year note now up 4 out of the last 6 trading days, breaking out of that consolidation range that it was found itself in about 2 weeks ago prior to the Fed announcement, right around the 12224 level. So now we're seeing it break higher and continuing to find a bid as we see the dynamics in the market unroll due to some of the dynamics that we're seeing from the ECB and some other central banks across the globe. I do want to point out that when you look at the yields now, we did see the 10-year touch a new 52-week low today in the yields. 235 was the 2352 was the low yield for the day, settling right around the 237 level right now. So again, off the lows of the day, but still very low readings going back over not only 52 weeks a year, but also going back to almost a year and a half ago to find these types of yields. Also, some of the dynamics that are playing, I should say, into the interest rate environment today. The global uncertainty, we continue to see that roll out. We saw the ECB overnight indicate that they're monitoring the 10-year yields on the German Bund because it did go to negative, and so they're going to try to not navigate that. They might shift their rate policy again, depending on the dynamics that they're going to have to deal with, seeing those 10-year notes going to a negative yield. So that really actually is when we saw the 10-year yields go to the low level that was earlier this morning. And then some of the other dynamics in the market that's digesting today is the Brexit issue. We're seeing that change hour by hour. The market's trying to account for the impact on the global growth story, and not only in Europe, but also from a much more macro view as well. So the United States is trying to anticipate that as well. And you can see this message that the Fed continues to deliver. We're seeing Fed officials coming out this week and again continuing that soft tone, indicating that some of the dynamics in the market that maybe they might be a little behind the curve. And if you look at the CME Fed Rate Watch tool, you're actually seeing now June pricing in about a 30% chance of a cut. It's been shifted up now to June. So if we continue to see that push forward, it'll be interesting to see how the Fed plays this in their next couple of meetings now that we're seeing the market anticipating the possibility of a cut by either the late or summer or early fall. So those dynamics in the marketplace have now pushed the 10-year yields down to the 237 level, really 52-week lows when you look at it year over year.